Welcome back to another video. Today I will be talking about Docusign. Docusign is an American-based company that arranges electronic agreements, online PDFs, e-signatures, and various other online software tools similar to what Adobe provides with their PDF. So I will be explaining why Docusign is down around 52% on the year, and we'll be explaining this one big jump that caused Docusign to go down over 40% in one day, and whether I think the stock is a buy or not. So why did Docusign plummet around 40% on December 2nd? Well, they released their earnings. While their earnings were pretty good, they grew 42% year over year and 28% in terms of billings, and increased their margin by over 5% quarter over quarter. It failed to give good guidance. Their guidance only grew 22.1%, while their stock had gone up over 2 or 3x from year over year. The guidance also suggested that once the coronavirus is over, that Docusign will return back to normal earnings, which was not as high, obviously, as the ones during COVID. As you can see, Docusign's EPS has been quite down. In 2018, they posted negative $8 a share and then turned a profit in 2019 and then turned back to losses. What makes this very interesting is that even though in 2019 they had much less revenue than they do now, they turned a profit during these months, and that's what scares me the most about Docusign. Even with this enormous revenue growth and enormous gross profit growth, they're still unable to have a positive EPS, which clearly shows me that Docusign management will not be able to turn profits, or will be much difficult for them to turn profits even if their revenue will continue to grow. One other thing that I thought was interesting was their PE ratio. Their PE ratio was all over the place, but this can be taken with a grain of salt. When they had around $4 to $5 EPS, their PE was around 14, 15, 16, which is much more reasonable. But once they started turning losses, the PE metric was basically rendered useless. So what I think about this stock is that people switch whether they like it or not. Kathy Wood loved Docusign quite a bit. She bought around 20 to 30 to 40, $50 million worth of these shares, and then now she's liquidating them at lower prices. And that's what's happening across many investing firms. People realize that the best has come for Docusign. But I think the single most important problem with Docusign is their competition. I believe that Docusign has almost nothing proprietary. I believe it can easily be copied, and many other companies have already copied it. I think Adobe would be a much, much better investment than Docusign. I've used Docusign products myself. It is effective, but I don't think it's investable. In terms of a dollar amount at what I'll consider investing at, even though it's a little bit shrewd, I would love to see it come back below $50 a share for me to consider it. At that point, if I do see that Docusign is still stagnating or growing, I will be investing in this firm. However, at these valuations, I do not think it's investable. Thank you so much for watching, and have a great day.